Welcome to Finademy course of Technical Analysis Basics. Our topic today is support and resistance. Use the link in the description to download the app on the App Store for more courses and free practice tests. Number 1. Support and resistance are the next major concept after understanding the concept of a trend. The support and resistance levels, where the most trading occurs, can be defined as battle lines. Support levels are where demand is perceived to be strong enough to prevent the price from falling further, while resistance levels are prices where selling is thought to be strong enough to prevent prices from rising higher. As you can see in the picture, the bottom trend line represents a key support level, while the upper trend line represents a key resistance level. The arrows near the top and bottom trend lines show the levels where the price seldom surpassed until it broke out higher or lower. Answer the question. Which statement is true about support and resistance? A. Support levels are where demand is perceived to be able to prevent the price from rising. B. Resistance levels are prices where selling is considered to be strong enough to prevent prices from falling further. C. The support and resistance levels, where the most trading occurs, can be defined as battle lines. D. Support levels are where demand doesn't exist. The correct answer is C. The support and resistance levels, where the most trading occurs, can be defined as battle lines. Number 2. Support and resistance levels are psychologically important levels where a lot of buyers and/or sellers are willing to trade the stock. When the trend lines are broken, the market psychology shifts and new levels of support and resistance are established. Round numbers tend to be important support and resistance levels due to their psychological importance. For instance, many investors watch the Dow Jones Industrial Average's 20,000 or other levels as key milestones. Traders watch round numbers like 10, 20, 35, 50, 100, and 1000 since they often represent important turning points where traders will make buy-or-sell decisions. Buyers will often purchase large amounts of stock once the price starts to fall toward a major round number, which makes it more difficult for shares to fall below that level. On the other hand, sellers start to sell off a stock as it moves toward a round number peak, making it difficult to move past the upper level. This increased buying and selling pressure makes them important points of support and resistance, and, in many cases, major psychological points as well. Answer the question. When will sellers start to sell off a stock? A. When the stock's price starts to fall. B. When the stock moves toward a round number peak. C. When the stock's price is lowest. D. When the stock reaches a peak of exactly 1001. The correct answer is B. When the stock moves toward a round number peak. Number 3. A trend line doesn't cease to be an important area of support or resistance when it's broken. Rather, its role is simply reversed. If a price breaks out from a resistance trend line, the trend line becomes a support level moving forward. The only catch is that the reversal needs to be a true reversal rather than a false breakout or breakdown, which generally means that it's accompanied by significant volume and a price spike. Answer the question. Once a price breaks out from a resistance trend line, what will the trend line become? A. A support level moving forward. B. An error. C. A resistance level. D. A resistance level moving backward. The correct answer is A. A support level moving forward. Number 4. A break beyond support or resistance does not always indicate a reversal. For example, a breakout higher may be the start of a faster bullish trend and vice versa for a breakdown below trendline support. There are also instances of false breakouts, when a price may break out higher on low volume and then fall back into a price channel. Traders should be aware of support and resistance levels and avoid placing orders at these major points since they are usually characterized by a lot of volatility. If you feel confident about making a trade near these levels, it's important to avoid placing orders directly at the level since they are rarely reached. This is because the price never actually reaches the whole number, but rather flirts with the levels before rebounding. Traders may also place stops or short selling orders around these levels to capitalize on a breakdown or breakout. Answer the question. When do false breakouts happen? A. When a price may break out higher on high volume. B. When a price may break out higher on low volume and then fall back into a price channel. C. When the price reaches the whole number of orders. D. When a trade near support and resistance levels is made. The correct answer is B. When a price may break out higher on low volume and then fall back into a price channel. To learn the full course, please download our free app Finademy on the App Store. Thanks for watching. Don't forget to like, share and subscribe to our channel for updated videos every week.